Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week. Hopefully, lots of great ideas and opportunities for you throughout the show. Well, this week may be called historic. This is the week that the president came out and asked who is the bigger enemy, our chairman of the Federal Reserve, Powell, or China, Xi. Of course, this was the week that the trade war really heated up, and I have so much to talk about. Stock market started out okay during the week, and most of the week was higher, with Monday being the best gains as the Trump mouthpieces were out, Kudlow and Navarro, saying, well, there would be no recession. And the president himself came out and he criticized the Fed again and saying they should cut rates by a full percentage point. The market was holding okay, and then Thursday the report came out of the flash PMI had contracted. That was brought it down to 49.9%, and that's the worst reading since 2009. And later in the week, joining that was the housing sales number, which was awful. And what it looks like is that the U.S. markets, certainly U.S. manufacturing, the economy, joining the world in a severe slowdown or an actual contraction, as we're getting those numbers to be quite poor around the world. Everybody was waiting for Powell and the Fed minutes to come out on Wednesday, and those showed a confused Fed. They were mixed on whether or not they should have done the cuts. Some people didn't want any cuts at all, some of the governors, and some wanted 0.5% or more. So they were totally confused. They talked about low inflation, a slowing economy, and noted that other central banks had no more bullets. So they were conscious of the fact that the rest of the world couldn't do much to stop the recession that was looming. And they tried to make everybody think that this was, the one cut that they did so far was just an adjustment, and it wasn't going to be the beginning of anything big as far as rate cutting goes. But the biggest hit came around that same time of the PMI news when Fed Harker, who's a non-voting member, came out and he said there is no need for stimulus. Well, that kind of talk kept coming from him even after the Jackson Hole speech that came out, which everybody was waiting for again, and the markets were trying to rally into the Jackson Hole speech because everybody knows that Powell would try to soft step and not ever want to upset the markets. We saw that from Bernanke and Yellen all the way back. They'll do anything to try not to upset the markets. Of course, Greenspan never said anything you could understand. So that was pretty a typical speech that that the markets believed it was going to hear. The Powell did come out, and he did say that we'll do what it takes to keep the expansion going. And he said a lot had changed in the 3 weeks before this Jackson Hole meeting, and the other as he was talking or after he was talking, other Fed heads came out. Mestard said that the economy looks like there's no additional need for cuts, and Bullard said there should be more cuts right now. And then Harker came out again and said there is no more cuts that they want, and there's no need to do so. And that's all in line with what has been the Fed saying a low amount of inflation, but he did say inflation is creeping up to the 2% level. But there was such a nicely timed a statement that came out of China. If If President Xi wanted to do something to upset our markets and be right in the face of Powell, he did it. Because then he came out and said that there would be a retaliatory tariff on $75 billion in goods, and this trade war is starting to heat up. He said he would resume tariffs on autos and some ags, and man, was that ever timing. Well, the market started to absolutely get killed after that, and we saw even the S&Ps move from up 12 to down about 16. Well, that was about a 28-point quick drop, and then the markets were recovering. It seemed like you couldn't really break the market. They were coming back. And then our president came out and made these unbelievable comments. And then he essentially orders U.S. companies to bypass Chinese companies, to stop doing business with China. He says, we don't need China. Again, reiterating, he wondered who was the biggest enemy, Powell or Xi. Well, this is just historic. And the markets collapsed on the news, Dow moving down well over 500. And he, as I speak, is meeting with Kudlow and Navarro regarding further retaliation from the United States. The stock market is moving down sharply, and the S&P 500 now down over 60 points. This was a week that was trying to be calm and trying to be higher, but that's not what we're getting here late on Friday. And clearly the message out of the Fed, and the continued messages out of Fed heads, is just convoluted. We have conflicting messages coming, and the Fed is just plain clueless. For the stock market, well, it stalled in the resistance that we suggested that it would. And with worldwide economies really slowing down, and this trade war really picking up, and central banks having nothing that they can do about it, and essentially scaring investors with their talk, the 10-year bull that we've had, well, if anything, it's teetering. We expect wide swings, have expected that, and I think that's still where we are. In a very indecisive market that bulls want to push up based on low interest rates or potential stimulus, and other sellers are out there because they're scared of what they're seeing, and I don't blame them. I'm scared too, because our country and world is run by central banks and leaders that just don't have any idea. I just don't know if our president has any understanding of economics whatsoever. And somebody like Navarro, who has his ear, is just simply a pro-tariff guy and not a free market guy. Neither is our president. I mean, people say to me, do we ever have free markets? Well, maybe we don't, but we need to be a lot closer to them than we are right now. We have no idea what the real economics are in this world. And if there is no capital expenditures and slow growth and poor savings, it's all stimulated by the government and these central banks. And it's a very bad situation. And if you want to know why there's a bear market ahead, well, that's why. Tough situation. Stocks for the week, after being ahead for the week, are right now closing in on down about 1% after this big decline we're getting here on Friday. Bond market, after being lower than rallies, and the 30 years up over a half a point. The 10-year yields down to about 1.52%, and that 20 and a 2-year to 10-year inverted again this week, and that also scared the market. So we have the inverted yield curve, and again, I've said it before, you can watch my other videos that are there for members, that in the past the yield curve inverted because the Fed was pushing up interest rates in the short end. Now the yield curve is inverting because world economies are crashing, and the long end is coming down fast, and the Fed is way behind that curve, and they're going to have to do something, because they just can't stay there. They're fighting it. They don't want to lose control, but they've lost control. Gold market on that news moves up 11-12 bucks. It was even higher than that, getting back up to the top of a range in there. That's a 26-point gain on Friday so far. Silver really strong, also up about 30 cents in the week. And then you get platinum and copper, which are really weak. Watch Future Speak, and you will see our deep analysis on those markets also. Dollar, which was firmer, drops 0.5% on the week, and that's all Friday on this trade war, and that's what's helping gold. And then oil, following our patterns perfectly, down about $1.15 on the week, and most of that is Friday. Follow me on Twitter at askSlim. Become a YouTube subscriber. If you like this video, make sure you give me a thumbs up. I've got lots more to show you in here as we're going to look at stocks, some that did well, some that did not, with some good messages on them. And of course, we'll be looking at a shorter term view of the 5 major markets. All right, I look at the best stocks for the week. What I do is cycle analysis. If you're not familiar with cycle analysis, it's the heartbeat or the rhythms of the market. We look for repeating patterns, and those repeating patterns are just loaded with information. We do that in multiple time frames. And if you want to learn about cycle analysis, go to the askSlim website, askSlim.com, to the top of the navigation and look where it says workshops, and go to the page that says cycle analysis workshop. There's an informational video there, and you can watch that and get the information and learn about this 20 video module workshop. It's just fantastic. So please consider that. You'll never look at charts the same. Let's take a look at those charts you'll never look at the same, and we're going to look at the best of the week. This is loaded with some of the retail stocks. Basically, the retail stocks that have done well are the ones that really have done a good job with revamping their stores or doing good online sales. So e-com has made a difference for some of these, and Target is one of them. You can see the big gain right in here, as this was a monstrous week, 20% on the upside in a week like this, as these earnings were just great. Analysts upgrading it all over the place. We think it's a bit overdone, and there's other opportunities coming. You see that line right over there? That's the green line is around just under 100. That's the 23.6% retracement. That's about the area we would buy it, whether it happened now or happened later, thinking it's going to get back up to that 161.8% fib right over there. We'll make that a target for the next move, which is up around 108. So dip to about 100 and then probably rally up to 108. You could see the rhythms in the market here. And if you look at the bottom, what we have here is both the cycle analysis, the black right over there on a target, and then the green one right in here is Walmart. And you can see they trade very similarly. What's interesting is that when you get a low bottom, an early bottom, it's pretty powerful. When you get that, it hit our support zone. Look at the support zone goes up, support zone goes up, beautiful. And this one actually bottoms with Walmart. So it bottomed a little differently. There's a shift going on in here, so we will compensate for that. Maybe Walmart and Target are going to track each other similarly from now on. Next one we're going to look at is Nordstrom, JWM. This stock pops on good earnings, and when you look at that, well, that's a very different picture, isn't it, from what we saw as far as Target goes. This is in a downtrend. You can see the cycle right here. There are 2 out-of-phase cycles in here that are both affecting how it trades. You can see this one bottoming right at this point and then turning up. But the dominant one is over here, and it says not yet. So we don't think this stock is going to run away on the upside, and we think this upside tick here is a fake, as it gets a pretty good gain on the week in Nordstrom. Next one we're going to look at is Lowe's, L-O-W, and this is, pretty much a cousin with Home Depot, which also reported some good earnings before. Look at the magnificent cycle harmonics, as we call it in here. You could see the big dominant cycle right there, how it lines up and makes perfect lows. And when they make lows together, it's a nesting area. Usually they fall sharply into nested areas, as they did here and as they did right over here, and then turned up perfectly with massive velocity. This is the first week up of this cycle. So look at how long they rally in these upward phases. I mean, that says that this rally's got lots more to go. I think if it pulls back, you buy it. and then you're going to get a rally here up to about 118, 120. So maybe you get to buy it around 105 or lower. I think this stock is in magnificent shape and likely to move to the upside again. No matter what I say about the weakness in the stock market, the good stocks are going to go up. They'll do better on the up days, and they will not fall as much on the down days. Let's take a look at that Home Depot right there, which surges to a new high. Based on the cycle rhythms that I see in here, I would say that this looks to me like it's got a little bit more time to go. I would expect some pulling back in this corrective area right here, and then moving up again. This actually might be an early bottom right in here, so this yellow zone may need to be much shortened, and that would mean the buying opportunities would be sooner in there. But let's see how much it can pull back in here. We think that after some pullback, it's going to be moving up again. But you can see it got up to our fib target zone right up over there and then started to back off. So I think Home Depot is going to stall a little bit, give a little bit of ground, and then we'll get a better buying opportunity in there. But earnings were great, and the stock gets a nice 5% gain on the week. And now we're going to look at Boeing. Now, Boeing has given some ground back in here. It's only up on the day about close to $4. It was up about $12 on the day. There's rumors out there of the 737 being released to be able to fly again sometime in October. But this pattern, I think, is a no. I think that this low makes no sense to me. It's just a temporary minor low based on this cycle right down over here that you can see right in here. So it makes a small cycle bottom on those two out-of-phase cycles, gets a rally, but I think it's going to continue to fall into October, November right in here. And I shorted it today, and that was really fortuitous, let's say that, because I did it right near the top, and it sure seems like it was the right thing to do. So covered some of that already, but I am net short, and I'm going to remain that way right now in Boeing. That is a look at our side-by-side chart that you can see that our members get, where we have the cycle analysis both on the weekly chart, as you can see right here. Let's zoom in there, and the daily chart right over here. And you can see how it's moving up and giving this big shooting star right there, and that usually is a top, and it hit perfectly at that 78.6% upper sell zone level. And I think the stock's going to pull back. So that's why I sold it, as it hit up around that level, and I don't really think the stock's got a whole lot of upside in it. So that's a look at Boeing. That is the best 5 stocks for the week that I wanted to show you. Of course, I look at over 300, so always have a lot of questions from my level 4 members on some of the other charts, and glad always to share that information with them. That's it for the best, and now we're going to take a look at All right, for the worst stocks for the week, we got some big losers in here and some stocks that I actually thought were going to be big losers. The first one we're going to look at is CREE, C-R-E-E. This was on my list of riskiest stocks for the year, and I got to tell you, this stock went from 40 to 70. This year, and that really did not look like a very good call. The stock was just simply, in my opinion, extremely overpriced. They got so crazy with it, and now it made a very significant. I wanted to show you. This is what I want to show you right here. There we go. So there is that top pattern that formed in there, and what's important to note in here is when you look at this big dominant cycle, you can see it right in there. It's very clear. And note, there are 3, what we call minor thirds. So cycle analysis is like music. So there's the rhythms in here, and there's your minor thirds. There's minor thirds in this cycle also, all very clear as you look at them right up over here. And now look at the first minor third here. It broke down. It got under that level right over there. And that says that each of these in here will be stair-stepping on the downside. Yes, we're looking for a little bottom in here, but their earnings sucked. Guidance was really week, and this stock was just very overpriced. Riskiest for 2019, this stock could actually be down on the year based on what we see in here, even after it had gotten up some 75%. Horrible pattern, and we think it's going to have a rebound, as you can see, and then head lower again. So that's a look at CRE. We'll be looking for a place to short it. Hewlett-Packard, HPQ, this stock has been in a negative pattern also, and you can see it. We have colored phasing in here. The greens are the positive, the yellow are the corrective, and the red are when there's breakdowns, and we expect bigger declines. You can see it broke down right in here, got a little rally, but then absolutely collapsed, broke down into this period right here. But this red zone right over here comes at the end of the cycle. So we believe that is a temporary bottom that's going on right there. The stock cracked for 22%. Cracks for about 12%, and this earnings beat, but their sales missed. And maybe the big news was their CEO stepped down. Claims that family health matters caused that, and maybe that's true, but that is maybe just an excuse. And the key thing in here is to see that we do swing high, swing low analysis. We use the swings in here to tell us where the sell zones are. Look at this one, magnificent. Look at this one, magnificent. And this one, well, it comes to the stock moving up to around $19. So we think there's going to be a rebound in here, but it would have to build a base after that. In other words, not make another new low like it did in each of these cycles. It would need to build a base and then be in shape to move to the upside again. But earnings beat and really, really bad sales, and analysts all downgrading the stock. Can you imagine downgrading it now and people pay them money for that? Holy cow. Next thing we're going to look at is a stock that I hardly ever look at, and that is Aflac. But you can see in here, beautiful cycle rhythm. So let me give you a little test. Take a look at this. Look at where the cycle rhythms are, and try not to pay attention to my forecast, and there the dotted line, and see if you can see why we expect a rally. But we don't expect the rally to be able to get far, and usually when you challenge the low, like you did right over here, the next rally then gets to about 1/3 to 50% of the way back, and then turns sharply lower again. So Aflac moves down. It gets crushed on the news that they have an affiliation with Japan's Post, and that Japan Post had improperly sold hundreds of thousands of Aflac products, and the stock gets absolutely killed on that. A repeater is Macy's, which continues to move sharply to the downside, 7% this week, as analysts are downgrading the stock, and that's after earnings. Now, the reason I picked this one to show you is because you could see the beautiful cyclical rhythms in this stock, and you can also see that, well, it's due for a bounce, and to bounce into the sell zone. Sell zones work very nicely in here also, as you can see, and the stock likely will continue down into November. So if you get a rebound in here, well, like a lot of stocks lining up, we think it'll be November. Another stock that I shorted when I saw that news today is Alibaba, BABA. Take a look at this. Now, this stock gets up into the resistance zone and starts to fail. And now look where we are, where there's a nesting coming in here on the downside around the beginning of October. That says to me that whenever you get into one of those periods, look what happened here, smack. Look what happened here, smack. That's right in here. And the stock could easily break under 150, maybe down to about 143 based on that fib right there. So the stock gets up today to about 178, and I'm projecting it to get down to about 150. So I'm maintaining a short bias in that stock because I think the risk rewards are very high. That is what I'm going to show you in the worst stocks for the week. You get a good idea of what our cycle analysis looks like, and I hope that you found that extremely informative. When you look at that, you find some good value, and please do go check out our cycle analysis workshop. Be right back, and I'm going to show you what I think will happen next week. All right, this is our short-term view for the coming week. First thing I want to tell you is that next week is my vacation week. So those of you that are our members, you will still get everything that you get in level 1, 2, 3, and 4, except that I don't produce any videos on my once a quarter vacation week. So that's it. We do videos 48 weeks out of the year, and I'll be still on the markets answering emails and stuff like that, but just will not be recording videos because I'm going to be traveling for the week with my laptop. So no videos coming up for the next week. You're still going to be able to get all of our great analysis if you're a premium member. And if you're not, well, please do write to Matt, M-A-T-T, at askSlim.com and ask him for our trial memberships. We have them for levels 2, 3, and 4, and you'll be able to either get our videos, over 400 of them, for level 2, which also has our daily snapshot. You're going to love that if you're an active trader. I'll give you a little peek at that in a moment. And for level 3, you get our Slimulator, which is so outstanding. Logic built into this program that just gives you our directional biases for the 84 best traded symbols, stocks, ETFs, indexes, commodities. And then for level 4 members, you get all of that, and you get our charts live on your TOS platform, Thinkorswim, TD Ameritrade being our preferred broker. So that is all the opportunities you have to get our specials. Just write to Matt, M-A-T-T, at askSlim.com. All right, so now we're going to switch over to these charts and take a look at what I said last week and what I think is going to happen in the next week. I'm going to give myself about 70 to 75% accuracy in the last week. Some things went my way late in the day on Friday as expected, and some things not. As the move in gold maybe put it a little bit up for the week instead of down. Though light crude and the dollar and the stock market, I'm going to get full credit on those. A little bit off on the gold market and the bond market. So that's where I get dinged a little bit. Let's see what's going to happen in the next week. And I'll try to push the forecasts out maybe a little further because I won't be doing this video in the next week. Still, our members are going to get our updated charts, and you'll have our updated forecasts also. So let's take a look here at light crude /CL on the daily chart. Here you could see a very, very nice cycle right in here. So here was the bottom. Here was the bottom right in here, and projecting to a bottom here. Now this rolled over as we expected, and now for the coming week, we think it'll fall through most of the week. It could test that area of 53 on the bottom there, or get as low there, about 51.90. That's kind of the range of the short-term bottom that we would expect, and that would be setting up a potential bounce in there again. But based on our work on the intermediate patterns, we don't think that that bounce will get very far, and we still think that we're going to be moving lower. So again, we talk about that in future speak, and we'll show you the weekly intermediate charts in that video. So that's light crude. We'll look for down and then a bounce and testing that support zone. The gold market /GC getting this boost today on this wild day, and moving back up to the top, near the top of the range. The high was 1546. We said this week we thought the range would be 1482 to 1545. And we were fairly close to that as we had these 4 days in here coming down, and then getting to the top of the range right in here. You can see that we expect the next week to be on the downside. So far, it has really withstood any correction, and the consolidation has been sideways, and it might continue to be that way. We were looking for a buying opportunity under this area of 1490, maybe as low as 1460, but that really does not look like it's coming. Now, we do expect, I'll show you, maybe some rebound in the dollar, but this might just be a choppy sideways period in here, and then when these cycles take over on the upside, well, I think it's going to be some surprise numbers as the market then moves up again. So we're going to look for a choppy or down week, continuing in this range. Momentum still incredibly strong right in here. I didn't mention the momentum in the oil market. That's neutral, but the momentum here in the gold market strong. If you believe in momentum, and I did another video on Thursday on using momentum in multiple time frames for either option traders or swing traders, you really want to watch that. And here you could see this upward momentum, the slim ribbon, which gives you that moving up. When the slim ribbon is positively configured, you have upside momentum. The projection oscillator, every time it's oversold, is a buy signal, and you could see every one of those working magnificently. And the volume bars are colored green in there. So it's just a great way to look at momentum. If you don't have the slim ribbon on your site, it's free. All you have to do is have Thinkorswim and then download it from my site, and you'll be able to have that. If not, you can just use these exponential moving averages, but you really won't have those signals in there. So it's an 8, 13, and 21 exponential moving averages, but you kind of want the signals. So I would say you should have a Thinkorswim account. You want to open one, just write me and I'll give you my link so we get credit for that. That is a look at the gold market. The next thing we're going to look at in here is the dollar, $ DXY. And we'll zoom in and look at that. So the dollar getting absolutely hammered today as the trade war heats up, and the fear is interest rates are going to continue to crash, and the Fed's going to have to follow, and the convergence between interest rates between the U.S. and other countries will continue, and that's not good for the dollar because money will flow out of it, and it's moving down. So for the next week, we're kind of looking for a small down week in here. Following this right in here, we see the support right over here around 97.50 or so. That's probably where it's still going to get support, but it could fall underneath this 89-day moving average as it's done in the past. And if it did that, it would have our projections would begin to get more negative. And if it broke underneath this level here at 97.02, well, top would be in place. You would see the head and shoulders pattern in here, and it would be a lot worse. We're going to look for some mild downside action in here. Note that momentum remains up in here, but it is weakening right now. And momentum has been somewhat choppy in there and starting to weaken. So there is some concern there, and it could get to be worse on the downside. We're going to call it a small down week, but it could be worse. The next thing we're going to look at is the bond market, /ZB. And you can see right here that the bond market is doing almost what gold is doing, right? It's almost a perfect pattern compared to gold. So gold's moving a lot with bonds or with interest rates, and positive momentum, very clear in here that you could see, and getting oversold on the projection oscillator on the bottom said that it was likely to move up again, and sure enough, there it goes, having a good day today, up $1.22, and so very strong. We're going to look for a minor pullback in here for the week, and then moving up again. That's kind of what we'll look for, is a small change. Give some back, move back up, and a small change for the week. But looking out a couple of weeks, it looks like the pattern is positive, and this bond market could still be going up. And I look at some pretty high projected numbers in the Future Speak show. So the last thing we're going to look at is the stock market. The stock market collapsing today. We had been talking about a resistance zone, an area that we thought that the stock market would rally to and continue to fail from. We thought we would get wide swings, high volatility, and that is what we are getting. Excuse me. So as I look at this chart and I see the market moving down, it was just incredibly good charting work that I see here. I'll pat myself on the back a little bit, but I give more credit to the method than I do to myself. Of course, it's always up to the analyst to be able to use it the best they can. And this, you can see, is perfect action. We get a very, very negative cycle. It moves down very sharply right in here. The probability of that being a significant low was small. It meant that this minor cycle rally would come and fail. And you can see that. Now this rally comes right in here and fails. So that means it moves down in here for maybe the next 3-4 days on the downside. So if we got a rally back because of something that maybe trumps that, or maybe he untrumps it, then it would be where you get a bounce, but we don't think it would last and move down. And you could see our projection in here really points to mid-September, second week of September, before that low comes in, and you can get a better rebound or rally. This is a pretty risky period in here. We're going to look for this next week for the market to get down to this 28.50 to 28.20 area. I'm sorry, right there, and that would be the area that we would expect that it would get support. With the news that's been coming out, the market could get a lot more scared than that and get lower. All that would do is change this projection lower. That's what would happen. So we would then be forecasting lower numbers. Right now, we're going to look for that dip between this 28.50 and 28.20 area, then get another rally that should take you this towards the end of the week, and then a rebound into the following week, and then this riskier period right over here. The pattern is bad. We've been calling it bad, and we think is going to remain being bad. I want to show you one more chart, though, because I really want to encourage you, if you're a short-term trader, to consider taking a trial on our level 2 membership. The grid I'm going to show, chart grid right now, goes to our level 4 members, and they can have it live on their Thinkorswim charts. But this, you still get it in static version every single morning. And what we do is we put together what we call our charts that include resistance, supports, and acceleration zones. The key to success as a trader, and especially as a day trader, scalper in the indexes, is to be with the greatest moves, that the market momentum takes you to the biggest trades, and therefore you have more winners than losers, and your winners are much bigger than your losers. And so many traders have difficulty with that, as they end up having bigger losses than they have wins. So take a look at these charts. Now, these are live on my Thinkorswim platform, but again, if you try the level 2 membership, ask RV for that if you want to look at this, and you will get this. So this is the S&P 500, the NASDAQ, and the Russell. We use the cash indexes on 15-minute charts, and what we do is we give you supports, resistance, and acceleration bands, or acceleration zones. Once it gets into these zones, there's a high probability that they are going to keep moving. The market is so bad that it got through the key support and then moved back down sharply through acceleration zone number 3. That is really rare that it does that. You can see in here on the NASDAQ, it did the same thing, and now it's in this support area and trying to hold right there. And the Russell, through the accelerations, through the support, and then accelerated again, and then is getting some support near that support zone. So the acceleration zones help you to stay in your positions so that you can make those big trades. This is some great information, and I really want you to write Matt at askSlim.com. Ask him for those trials. You'll be able to get a good sense for how to use this, and I think you will find it making a big difference in your trading. That is Market Week for the week. Again, I'm going for vacation in the next week. I hope you have a great week. I want you to be so careful. It is so crazy out there. I'm always wishing you great trading.